Unusual options activity is one of a few extremely important channels we've recently added to 349. Stick with me through this video and I'm going to explain exactly what unusual options activity is, why it's important, and how both you and I can use this information to make money. Now understand, Wall Street uses various indicators and analytics to help predict market direction and to help predict individual stocks that are ready to break out both to the upside or the downside. Now we've added a number of these to our 349 Discord to have the same information and advantages that these institutions and banks have. So let's talk about unusual options activity. But first, I'm going to simplify exactly what that is, and then I'm actually going to provide you a few examples so you understand how to read the unusual options activity. Just because you see it, you still have to understand if the trade is bullish or bearish and what their outcome is and what their time constraint is. Because you can't just hop into a trade. You have to know exactly what your entry point is, exit strategy is, and how you're going to make money. So let's get right into it. Unusual options activity involves being traded at a much higher volume than their daily average. Now, large volume in option contracts can indicate that somebody is making a large bet based on transparent or non-transparent information. So let me explain what that is real quick. Transparent information is information that's available to the general public. It might include an earnings call, or an upcoming company event, a company conference, or maybe even a product launch. Now, these events are known by the general public and traders and have proprietary information that they use to place this unusual options order. Now, non-transparent information, that can include an event that's not scheduled or known by the public. Now, these can be early release of earnings, maybe a company acquisition, self-offering, maybe an executive leaving, being fired, or being hired. I'll give you an example. Let's look at Sheryl Sandberg from Facebook/Meta. Now, when she announced she was leaving as COO of Meta, there were quite a few traders that entered into put contracts implying a bearish position prior to her announcement. So when the announcement was made and the stock quickly fell 6% that same afternoon, traders and investors that had this non-public information turned a quick and substantial profit. So you're saying, well, it's non-public information, but that's where the unusual options activity kicks in. That day, I remember I kept seeing put contract after put contract, almost as if they knew the information was going to be released, which it was. So now let's talk about characteristics of unusual options activity. To understand exactly what you're looking for, several characteristics that lead to unusual options activity. Number one, the daily volume is much higher than average. Now, this could be 5 to 10 times, meaning on average, if maybe 500 contracts are traded in a single day and you see unusual activity of 10 times that, 1,000 contracts, that would set off the alarm. That would be an unusual options activity, and you would find that on our 349 Discord. And again, these come in every minute of the day. There are new options activity, and you have to be privy to that on a timely basis to understand when to enter in and when to exit out of certain trades. The majority of a daily volume of an option contract, it can come from very few trades. So it might be 1 or 2 traders making multiple trades to get to that large quantity. Next, spikes in implied volatility. If the price of the stock hasn't moved, but the cost of the options contract is going up, it tells you that the IV is increasing and you're paying more for those contracts because the price move is going to come. Now, in this case, the unusual options activity telling you and I that a big move is coming. Unusual options activity does not always imply somebody is making a wager or a bet on one side or the other. Unusual options activity can sometimes be a hedge. And I'll give you an example. Let's say Tesla has their artificial intelligence day coming up, and me being an institution, I'm holding 500,000 shares of Tesla. I safeguard myself by buying Tesla puts so that when Tesla comes out with AI day, if it disappoints, stock goes down, I cover myself and I make a quick profit with the puts while I'm still holding my long-term position for the stock. Now, similarly, if I'm holding a long-term position of Tesla of 500,000 shares and I want to get a premium, I will sell covered calls, meaning I will sell a call out of the money. So if the stock goes up, I make not only the premium, but I make it up into my strike price that I sold my calls at. Another way for hedge funds to hedge their position. So now that I've explained what unusual options activities are, let me bring up some examples from my 349 Discord and show you exactly what positions big money are taking as we exit out of the day. So let me just share the screen here, pull it up, boom, there we go. We go to unusual options activity. We'll start with the last one that just came in. It's an Apple put. They bought it below the bid. So basically, this is a bearish position on Apple. Let's go one higher. You've got a Tesla call, and it's a trade side ask. So they're paying the ask. So that is a bullish position on Tesla. Also not that big. Now, the one above it on XBI, also a bullish position. This is more significant because you'll see the volume and the size of this specific trade at 1,500 contracts when there are only 1,000 contracts that have open interest is also on the ask side. So that is a bullish trade. Let's go back to EWZ. Again, bid 5,000 is the size. Open volume is 10,000, and the volume today traded is 8,300. Those are all pretty significant numbers. It's a call side, and the trade side is an ask. So they paid the ask, which again is a bullish position. Let's go back to 2:48 p.m. APA size about 500 contracts. Open interest about 8,000. Again, it's an ask side trade. That's a call. So that is bullish. Now, in order for this to be bearish trades, you would have to see trade side being a bid. So let's just go up a little more to see if I can find one there. K-Web, again, size 5,000 contracts. Open interest was only 174. This is a major options alert in a bullish position because it's a call side block trade, and they paid the ask. It expires on June 24th. So this trade expired about 10 days on the K-Web. So if I was going to enter a position in K-Web, I would be taking a bullish position. These are all ways to look at it. Okay, here you go. Ask side on the put on BRK, which is Berkshire Hathaway, B. So they're paying the ask on the put side, which would be bearish. So again, there is a bearish position. It's a pretty substantial position on Berkshire Hathaway, option B. Okay, here's a SPY. Again, they're paying the ask at 2:40 p.m. So again, this is a bullish trade. Volume 2,000, open interest 5,000. So as we end the day, most of the trades, I mean, here's a SPY. They're paying the ask on a put, which is bearish. So there's definitely a mixed amount. VAL. So here's a good example. VAL. It looks like it should be bullish because it's green, but it's a bid side trade, okay? The volume's 8,400 out of 44,000. This is actually a bearish trade on VAL. Now you have to understand, here's the best way to look at it. Bullish trades, right? You'd see a bid side on the put or an ask side on the call. Again, if you're seeing a call option and they're paying the ask, that's bullish. If you're seeing a put and they're paying the bid, that is bullish. Reverse them, okay? Same is true on the opposite side. Let me just see if I can find you an example. That's a mid-market. Okay, here, SPX. They paid above ask on this one. Obviously, a bullish trade because you can see the green, so it's call contracts, and they paid above the ask, above the current price, which is a bullish trade. Again, above the ask. Now, you have to understand, some of these trades might reflect hedges by institutions that hold or own the SPY. But I just needed to clarify, bullish trades will show a bid side on the put or paying the ask on the call. Those both are considered bullish scenarios. On the other side, a bearish scenario, if you see an ask side on the put, meaning they're paying up a little extra money because they're paying the ask on the put, or a bid side on the call. Okay, these are very important. Just because you see green or red doesn't tell you the specific direction of the trade. You need to look at the bid side or ask side, and again, look at the volume. The same way institutions, banks, and hedge funds use this information to decipher the market. That is what we're providing for you so that you have a leg up on the competition. So you have an advantage when it comes to trading on a day-by-day basis. If you think this helps, stay for the next video. I'll be talking about a lot of great new channels that we've added to our 349 Discord.